Hey, Sats fans. Welcome back to Swan Signal Live. That's right. I'm not Sam. I'm reprising my role here at the hosting mic as I do every quarter here for our quarter of the reports. And if you've been listening to the show for some time, you know that I love these episodes. Get two great minds together, take a look back at what happened in the quarter. Let's look forward to the next quarter and beyond. So today I want to kick it off before we bring in Sam Callahan as our guest today, and the legendary Vijay Boyapati. Just a couple of things to talk about. First of all, is a big announcement. We have been working really hard to make the onboarding experience as fast and easy as possible via our app, the Swan app. You can check it out in the App Store. Just search Swan Bitcoin. And going through the KYC process for 90% of people is super simple now. There's no like scanning your face. There's no photos of your ID. You just need a few basic pieces of information. You can complete that in a minute and a half. Again, some people will be kicked into the longer KYC process, but for the vast majority of people, this is a minute and a half type onboarding experience now. Then you go in, add a bank account, and make your first buy. You can do this all in a matter of minutes now. And one of the things I love about this is all of you who are watching our Bitcoiners for some length of time at least. If you're here, you can now use the Swan app to orange pill in person your friends and family in just a few minutes. So if they ask you that question, which they will, many of them will over the next 12 to 18 months as we go into this ripping bull market and Bitcoin just melts faces, you're going to get lots of questions. Where do I get started? How do I get started? Because you are the Bitcoin authority in your social circle. And now you can just say it's easy. It's the Swan app. Just open up your phone. Let's go to the App Store, download the app, and in a matter of minutes, you'll be buying your first Bitcoin. Then you can send them over to swan.com/welcome, and Natalie Brunel will welcome your friends and family into Bitcoin. Super low ask, 1 10-minute video just to get started. If they're hooked, there's another 5 videos for an hour total. Great overview of Bitcoin. We've had a fantastic response to this course. So Swan app, welcome to Bitcoin. Put them together. We are going to help you create new Bitcoiners. So just keep that in mind when people are coming to ask you questions. And if you are a Swan client right now, you get $10,000. Oh, I forgot to mention that. You get $10,000 of free buys, no fees on your first $10,000 of buys when you start stacking with Swan. So it's super simple and easy to set up. And almost forgot the most important thing, no fees for the first $10,000. And if you're a Swan client right now, no fees for your next $10,000. So when you open up the app, you'll see a little counter. You have X amount of remaining buys, fee-free. So check that out now. Go smash buy, celebrate $10,000 worth of free buys in the Swan app. Okay. Next is Pacific Bitcoin Conference. This is the best experience I think in the Bitcoin conference world. We call it the Bitcoin Pacific Bitcoin Festival, right? It's not a conference. It's the vibes are super high. There's lots of other things going on besides the amazing speakers and content that are on the stages. We're going to bring even more to the table this year, expecting a couple of thousand, maybe more Bitcoiners to come and show up, especially if the bull market's ripping. Might get more than just a couple thousand, right? It should be a huge party. We've got this is October 18th and 19th. You can grab your tickets now at pacificbitcoin.com. Find a friend, come and hang out. This is the kind of conference where the speakers, the big names that you've been learning from for a long time, are just chilling and walking around and enjoying the festival as well alongside you. So it's a lot of fun. Absolutely recommended. This is the third time around. We killed it the first time. So last year was great too. We're just keep getting better. Our events team is on fire right now, not just with the festival, but all over the place. We're doing all kinds of events now. Okay, that's it. Let's get into the show today. Let's bring in Sam and Vijay. Lots to talk about. What a quarter in Bitcoin, fellas. Right? Am I right? This has been an absolute fire quarter in Bitcoin, historic for this amazing technology, community, revolution, however you want to put it. So looking forward to talking to you guys about it today. Welcome, Vijay.
It's great to be with you guys, and I haven't seen you, Sam, for a while, so I wanted to say congratulations as well.
Thank you. I appreciate that.
Awesome news. I'm very happy for you and Natalie.
Thank you. I appreciate it. Yeah, and happy to be here too, guys. It's always a pleasure to sit down with you guys, have a little quarterly review. And like you said, Brady, I mean, it's been a pretty phenomenal start to 2024.
Yeah, absolutely historic. So, I mean, we've got to kick it off by talking about these ETFs, right? If we're reviewing this quarter, I mean, this is the biggest news of the quarter by far, if not for many years in Bitcoin. So, I'll kick it off, hand it off to you, VJ. Just give us your overall impression of the ETF launch. We've seen 8 weeks of kind of action coming in. Did the first 8 weeks or so sort of follow what you expected? Was there anything that surprised you?
I think the launches are definitely historic. I think people who follow this space have said these are probably the most successful ETF launches that have ever happened. I think the level at which this is creating demand for Bitcoin is unexpected from a lot of people. I think I had the feeling that the ETFs would have a big impact because if you think about it, there's quite a heavy lift for the average person to acquire and own and hodl Bitcoin. Companies like Swan make it a lot easier to get self-sovereignty and to hold your own Bitcoin and to control your keys. But for a lot of people, the idea of figuring out even how to set up a Coinbase account or a Swan account or any of these exchanges and figure out what an address is and what a wallet is, this is a heavy lift for a lot of people. And most investors already have a brokerage account and they've KYC'd for that brokerage account. So it is actually really lowering the barrier to entry significantly. And what I think that does is it increases the size, the cohort of people who are reachable in this cycle becomes massively bigger now. So, people like my parents who may not be able to figure out what an address is or how to buy Bitcoin and transfer it to their hardware wallet could go to their brokerage account and just click buy as easily as they could buy Apple or Microsoft. So I think the cohort of people who can now get Bitcoin exposure is much, much larger than it would have been. And I think this is going to have a big impact on this particular bull market.
Was there anything that surprised you out of the gate, or is this the kind of action you like? The volumes seem to match your expectations. The particular winners, the leaders of the ETF race. Was there anything there that surprised you?
I think the size of the volume initially surprised me. If I sort of look back historically at what happened with gold and the launch of the gold ETF. Gold, an ETF was launched for gold in 2004, GLD, and it's been a massively successful product. But it actually started out pretty slow. But eventually it caused this, continuous increase in demand for gold and triggered, I think, was a big part of the 8-year bull market, almost continuous bull market from 2004 to 2012 for gold. I don't know if I expected the incoming demand to be as great as it was. And it's been really interesting to see the inflows versus outflows, like how big the outflows were for GBTC and how big the inflows were for the 9 other ETFs. I think I did think it would have been BlackRock and Fidelity, which sort of led the inflows because they have this very large natural client base. And in context, you look at a company like Grayscale, they don't really have a natural client base. There's the people who are sort of early Bitcoin or crypto investors who were looking for a product to get exposure to Bitcoin. But outside of that, it's not like their Fidelity. Fidelity has like millions of users who use their services. So they can sort of tap into that and increase demand for their ETF that way. So I think I did expect it was going to be Fidelity and BlackRock that would pull away. And I actually expected some of these ETFs would go away within the first year because they just simply didn't have enough demand to continue their business because the fees are so low. They're close to zero. And operating an ETF is not free. And I still expect that. I expect, the bottom 3 or 4 are going to disappear in a year or so.
Yeah. I mean, I was surprised by the inflows from the start. I mean, I knew it was going to be highly popular, but I mean, it's blown my expectations away. I think I said something like 10 billion for the year, and we're already exceeded that. And I think Standard Chartered put out a prediction of like their bull case was $100 billion by the end of the year, and that like really woke people up and was kind of like, oh, that's really bullish take. And that was right when it was launched, like in January. But like now it's looking like, I mean, they already have $58 billion in these things, and that's including GBTC, but still it's crazy. And like if you look at like the records of launches of ETFs in terms of the inflows, I mean, BlackRock and Fidelity have had 62 straight days of inflows. It's never relented for them. And it's not surprising to me that Fidelity and BlackRock really led for the reasons that Vijay already mentioned. But I was surprised at like Bitwise, how well they performed, being like a crypto native, so to speak, firm. They brought in a lot of inflows. And so that was one kind of like shocking thing. But another thing is that it's not even like these ETFs aren't fully integrated into the traditional financial system yet. And we still are seeing these significant inflows. I mean, if you think of things like the RIA platforms. So Cetera is one of those RIA platforms, and they use them to custody assets and trade. And all these RIAs like plug into these platforms. Cetera announced the approval of 4 of them. That's like a $190 billion one. Carson Group announced that it's getting to accept them. And that's only 2 of them. And there's so many more of these platforms that still haven't allowed their clients access to these ETFs. And I expect that to happen in the future. And that'll just improve accessibility. And then the same thing happens with these large wirehouses. I mean, there's rumors right now that Morgan Stanley is going to like race, and UBS are racing to be the first major wirehouse to finally offer these Bitcoin ETFs. And it just goes to show that only a portion of the traditional financial system is offering these ETFs. And what's going to happen when that becomes more and more integrated, gets more and more accessible to more of these institutional investors, I don't think we've even seen the potential of how much demand can come into it. And I know that's a crazy thing to say, but it just takes a long time for these institutions to adopt new ETF products. Sometimes there's actual rules where they need like 3 to 6 months of trading data before they approve them and bring onto their platforms. And I expect to see that in the coming quarters. And I think that's going to be a tailwind for these inflows to actually continue. And so to think about where this could go and how that drives demand for the underlying Bitcoin, I mean, it's kind of crazy to think about, but I think that's what we're going to expect. That's what we're going to see in the rest of 2024.
So we've had some decent price appreciation since the ETFs launched, and that's all in despite of these huge outflows of GBTC. And I know, Vijay, that you've been following and studying GBTC for quite some time, and I would love to hear what you think about GBTC outflows, how they've affected price action in face of huge inflows from ETFs, and how you think it might affect price going into the next quarter and beyond.
There's so much to this GBTC story. I don't know, honestly don't know.
Take your time, man. You're an authority here.
Had a whole episode with Sam about this. So there's so many different directions. GBTC has been around a long time, and for a very long time was the way in which equity market capital got exposure to Bitcoin. And what happened was, because there's no redemption mechanism like an ETF, and there was so much demand from the equity market to get Bitcoin exposure, GBTC traded at a premium to its underlying assets. The underlying assets of Bitcoin, it just holds Bitcoin, but it was trading above the value of the Bitcoins it held. And this created an arbitrage opportunity where you could sort of borrow Bitcoin, throw it into the fund, and 6 months later get GBTC shares, which were worth more than the Bitcoins you put in, and you sort of collect that premium that it had. And a lot of people recognized this and started thinking this is like free money that they could make. And in 2020 to 22, a lot of hedge funds started piling into this. A lot of these lending businesses said, oh, wow, I can make free money. So I'm just going to offer an interest rate to Bitcoin lenders. They give me their Bitcoin and I throw it into this trade. And so GBTC was all over the market. It was like at BlockFi, it was at Celsius, 3 Arrows Capital had it, Genesis. Everyone had GBTC on their balance sheet.
Yep.
And then in, I think it was February 2021, the premium went away. And the premium went away because you started to see competition for GBTC. You could get, in the equity market, you could get exposure to Bitcoin in other ways. And MicroStrategy is an example of this. But there are other ETFs in other countries that had launched. So there was less reason for there to be a premium. And also because so many people had piled into the trade, the premium got sort of arbitraged away over time. Then what happened is in the 2022 collapse, all these companies went out of business, but they filed for bankruptcy, but they had GBTC on their balance sheet. And in bankruptcy, you have to give your assets back to your creditors. And so they were forced, a lot of these companies, to liquidate their GBTC. And so you had these bankruptcy proceedings that have been, taking a year or more to complete. And a lot of them started in 2022, and the bankruptcy went through 2023. And some of them are still going. Genesis is still going, for instance. And so when the ETFs were approved, it gave a lot of these bankruptcy estates the ability to sell their GBTC at par, so they could get their Bitcoin value back. Because I should have mentioned once the premium went away, it actually turned into this huge discount. The GBTC premium went to a 40% discount, and this actually was part of the reason why a lot of these companies failed, like 3 Arrows Capital.
40% is massive. So people are just locked up behind this 40% like jail cell.
Yeah.
And when you get it out, you got to pay the toll.
It's amazing to think of this product. It's kind of this Hotel California product where Bitcoin that went into GBTC, the fund couldn't come out. And so Grayscale at one point was holding 630,000 Bitcoins in this fund, and they were collecting 2%. So for doing nothing, really.
What a business.
Just sitting, these Bitcoins are sitting in cold storage. They're doing really nothing. They're not actively managing anything. So they were collecting over 12,000 Bitcoins per year for doing nothing. And I think a lot of people were pretty upset that they held GBTC and that they were being farmed in a way. Anyway, so go back to 2022, the bankruptcies are liquidating GBTC. And so the ETFs come along and they have the ability to liquidate at par. And a lot of them do. And so you have massive forced sales of GBTC after the ETFs are launched. And so you have, on the one hand, these massive inflows coming from the new ETFs and just organic demand from regular people who want to get Bitcoin exposure and now have a good product to do it, the ETFs. And at the same time, you're having these massive outflows from the bankruptcy. And GBTC's assets under management went from over 600,000 down to around 300,000 Bitcoins now. So they've lost half of the Bitcoins under management. And that is a combination of bankruptcy liquidations. And here you can see in the chart liquidations over time. And they're kind of lumpy. There have been, periods when one bankruptcy estate started selling. So this chart shows the blue bars are the sort of organic outflows from GBTC on a daily basis. The yellow bars are Gemini's liquidation, and Gemini was part of the Genesis bankruptcy, and the red bars are the Genesis liquidations. And the cool thing about all of this is all of this data is public, so you can go and find it. And this chart that I posted on Twitter was sort of figured out by people who knew what the Genesis addresses were on the blockchain, and they knew how much GBTC Genesis had on its balance sheet because that's public data from the court filings. And you can exactly match the amount of sales of GBTC, the outflows on a particular day, to the inflows of Bitcoin to the Genesis addresses. So something else. Genesis was not selling to dollars. It was selling to Bitcoin. And so some of these bankruptcy sales were market neutral, meaning they don't affect the price because the price gets pushed down by the GBTC sales. The ETF has to sell on spot, but the estate is then buying Bitcoin, which pushes the price up. Some of them were market negative. So FTX, for instance, sold GBTC to dollars, so that pushes the price down. But so the interesting thing now is that it seems like most of these bankruptcies, or all of them, have sold all of the GBTC that they wanted to sell. And so outflows are going to drop and get to a more organic level. And I think what we're going to see now is the real effect of the ETFs over time, because you don't have this kind of artificial one-time bankruptcy liquidation process happening at the same time.
Yep.
Yeah. I think that's just such a key point that he said, that it could be market neutral. I mean, we know that Genesis sold all its GBTC shares and then turned around and bought 32,000 Bitcoin to pay off its creditors. And so when people were pointing at the Genesis bankruptcy estate for why Bitcoin's price was dumping, it's not really the case. It was likely coming from elsewhere in the market because they were actually buyers of spot Bitcoin, that bankruptcy estate. And what's also crazy is that, you know, despite 300,000 Bitcoin leaving GBTC or the Grayscale Trust, their AUM is still at $22 billion. And so they've benefited so much from the recent price run up, probably more than anyone. Barry Silbert's probably loving the market action right now.
In dollar terms, we should say.
In dollar terms, right. Yeah,
Right,
that's
correct.
key. But it's just crazy that they still have $22 billion worth of Bitcoin because of the price appreciation. And the reason like they can kind of get away with this, you know, 1.5% fee compared to the low fees of the other ones is because I think there's a lot of people that bought GBTC a long time ago. They don't want to pay taxes when they sell, and they're just kind of eating that 1.5%. And then, you know, probably a large portion of it also doesn't even think about annual fees. Let's be honest. It's probably a lot of people that like don't even know what an expense ratio is, and they're just like sitting in their GBTC. It's gone up a lot, and they don't even know about like the differences between these different ETFs. And so they're just parking their funds there. But I do expect what Vijay just said, where over time, I think you'll actually see the effects of these ETFs, and that'll actually probably force Grayscale to finally lower its fee. They kind of got away with this in the beginning, and I think you will see them drop their fee a little bit to remain competitive versus these other ETFs.
What are the fees at BlackRock?
I think BlackRock right now has like a deal where it's like 0% for the first.
It'll probably
I forgot what it was,
quarter,
like 6 months or 12 months.
Yeah.
And then I think it's around like 20 bips.
20 bips, yeah.
I'd have to go back and look at it, but pretty.
Barry loves sitting there in the middle, the middleman monopoly.
Can we linger on this point, because Sam brings up something I think is super interesting. So Grayscale was the company that fought the SEC to get these ETFs approved, and it's really ironic because they have suffered the most harm, the most loss to assets under management. And I think the correct way to measure it is Bitcoins under management, not dollars under management. Yeah. And they have had a 50% drop. So the question is, was that a good strategy? Should they have gone after the SEC? Because from a business perspective, what is the right outcome here? And the reason I'm bringing this up is they're pushing for other ETFs. They're pushing for an Ethereum ETF, and they have across all the other funds that they have, all of these shitcoin funds, they have another 10 billion in assets under management. Most of it, probably 95%, I think, is Ethereum. They're pushing for an ETH ETF as well. Now, is that a rational strategy from a business perspective? I think not. I think this is actually a very dangerous game that they're playing, because with GBTC, it was Hotel California. When Bitcoins went in, they couldn't come out. And so they had this massive pile of Bitcoins that they could collect fees on. And now they have the experience of what happens when an ETF is approved. They did lower their fee. They said they publicly said they would lower their fee, but that, it wasn't a big drop. It went from 2% to 1.5%, which is massively higher than all the other funds. And you had a fee war from these other funds, right? They were competing with each other, and they're like, we want to be the biggest fund, so we're going to drop fees to close to zero. And so GBTC stuck out like a sore thumb. And they have a huge problem, right? They don't have organic demand in the same way that Fidelity and BlackRock do. They can go to their massive client base and say, hey, we've got this great new product. Why don't you put some of your savings in it? And they can attract capital that way. Grayscale can't really do that. They don't have a base of millions of people to come to them. So, I think Sam made a really great point here, that really, I think their business decision was that they had a lot of people who had bought GBTC in taxable accounts who were essentially trapped. They owned GBTC, and they had, say, a 200% gain on the GBTC, and they didn't want to sell because taking the tax hit is more painful than taking the yearly fee. It's better instead of you're in California, say you're going to pay like 50% in taxes. It's better to pay 1.5% and hold Bitcoin, say for the next few years through a bull market and get the appreciation, then maybe sell later on. So the issue I want to bring up is to you guys, and I'd love to hear your thoughts. What is a rational business strategy if you are Michael Sonnenschein or Barry Silbert, who's like, probably pressuring him to make some of these decisions? What do you do here? If you're a businessman, my perspective is they saw this situation and they kept the fee high because they knew some of these sales would be forced because of bankruptcies. They had no control over that, and they assumed there would be a large fraction of people who held Bitcoin in taxable accounts, and they just thought, let's milk this cow as much as we can until the cow dies. Because if they get competitive and they reduce their fee to say 20 bips, then it takes them 6-7 years to get the same amount of profit that they get in 1 year. So I think their mindset was, let's just try and make as much money from this as quickly as possible, and then the fund is probably going to die, or it's going to become much, much smaller. And
I think so too.
Yeah, go ahead, Sam. Go ahead.
No, I mean, I completely agree. It was almost like a more short-sighted thinking, and I think they kind of have to. I mean, like maybe they looked at the competitors and they were like, we're not going to compete, especially with new flows. I mean, no one's gonna. There's no like new entrants picking GBTC with that high annual fee. It's all just like milking their existing client base for the annual fee. And so I think you're right. I think eventually they'll probably start to slowly lower their fee. They can continue to see outflows. I think it will shrink. Maybe you see, these other larger ETF providers. Maybe they'll want the Bitcoin in the trust. Maybe they'll sell the trust at a certain point to try to get that liquidity. And so I think they thought short term. Let's be honest. I think they kind of needed liquidity with all the other lawsuits going on as well. Maybe they were like, we need to milk this as much as possible in the short term because we have other expenses right now. And so I agree.
What are they being sued for, Sam?
What's up?
What are they being sued for?
Well, they're being sued by the New York Attorney General, Barry Silbert, Michael Morrow for Genesis, DCG. They're getting basically for defrauding investors. And so they're in the middle of a lawsuit there. And that's still ongoing investigation. They obviously deny the claims and they're fighting it. And that's related to all the intercompany loans and all the kind of shenanigans that happened during the FTX collapse and the Three Arrows Capital collapse. And them doing a large promissory note to basically fill the hole at Genesis. And basically the way they did that accounting, and they didn't disclose that publicly, and some of the messaging that they did to the public, basically saying everything was fine, really turned out to be not the case. And the New York Attorney General basically saying that they defrauded clients when they did that. And so that's ongoing. I think that's part of the reason why they're keeping the fee high, at least in the short term. I think they needed liquidity. I mean, they sold off CoinDesk. They're selling off other assets. And so it makes sense to me. But, long term, where GBTC goes from here, I'm not so sure. I bring up the other point I mentioned which is those platforms and wirehouses adding. It's like, how are these ETFs going to compete with one another if they're all dropping fees towards zero? It's going to be other ways. It's donating to core devs, which we could mention. That's kind of a hot topic right now. Donating to core devs. It could be, and it could be like getting onto these platforms. So like Cetera, the RIA platform that I mentioned, $190 billion on assets on that platform. They approved 4. They didn't approve all of them. They approved Fidelity, Invesco, BlackRock, and then Franklin Templeton. So the ones that are very TradFi, those brand names in TradFi, they're going to have a competitive advantage being on those platforms. And I don't know if GBTC is in that. Like, I know they're not in that, realm of ETF providers. They don't have that credibility. In fact, their history is very, very complex, and they have ongoing lawsuits. So I don't know if these traditional financial institutions, these wirehouses, are going to pick them over the other ones. And I think that's one way you're going to see these ETFs gain a competitive advantage over the other ones, like Grayscale.
Yeah. Can I make one slight disagreement with Sam? I think this is a really interesting point. I actually think the rational business strategy for Grayscale is to not lower fees. I don't think they can compete on fees. And I think even if they got in the same ballpark, let's say they dropped it to 30 bips, I think for people who want to be competitive on who care about fees, they're still going to jump out of Grayscale and into BlackRock, because let's say you're in a non-taxable account, an IRA. You're just going to optimize for the lowest possible fees, and you're going to go for the most reputable player. Grayscale is not the most reputable player. BlackRock or Fidelity are much more reputable than Grayscale, especially because, as you say, the lawsuits are still sitting out there. So I don't think they can compete on fees, and I don't think they have any organic incoming demand. I think they're trapped, and I think they made two irrational decisions. I'm not saying this is bad for the market as a whole. I think the ETFs were great for the market.
I was going to ask you about this. I know what you're going to say here. Yeah.
They
so why
shouldn't
did
have
they sue
argued for an ETF, and they
the
shouldn't have
SEC?
dropped their fees at all. Those were the two mistakes.
Well, here's the question for you then. Why did they sue the SEC to get the ETF built up? If they did they not think forward to, once we, if we win this lawsuit, BlackRock and Fidelity, et cetera, are all going to, have ETFs as well. You grant one, you have to grant them all effectively.
I think hubris was a part of it. I think they assumed that when the ETFs were launched, the fact that they were by far the biggest at the time in terms of assets under management, they thought that's not going to change. People are going to look at liquidity and say that this fund is much more liquid. We should stay with Grayscale. Most people didn't care about that, and their arguments that because we've been in this space a long time, we're very experienced, didn't hold water. People like, well, BlackRock's got like 100 ETFs. They know how to run an ETF. So that didn't hold any water. I think also, I don't think they fully expected what was going to happen, that they would have this massive amount of liquidations, and that there's also organic liquidations. I'm sure they expected with the bankruptcies there would be some amount of liquidations, but I don't think they fully expected that they would lose half of their Bitcoins under management. And if they knew that, then maybe they would have thought twice about fighting for an ETF. But they also had this pressure from their investors prior to the ETF, people who are holding GBTC, who were getting really unhappy that they were being charged 2% on this fund, and there was no way for them to redeem to Bitcoin to get out of the fund. So they had lawsuits prior to the ETF. And so I think applying for the ETF, part of it was like, hey, we're trying to do something here. We're trying to give you the ability to redeem to Bitcoin. But they're really, I think they're in deep, deep trouble just looking at their position right now. I think in maybe 1 or 2 years, they're not going to have the most assets under management. Well, I guess they've already been passed by BlackRock. I think they're going to drop way down the list, actually.
Yeah. No, I totally agree with you, Vijay, in terms of like they're kind of trapped, and I could see them keeping the fee where it is, because I don't think they're going to see new inflows if they say drop it to 1%. And I don't think it makes sense for them to drop it all the way down. You asked like one thing, like why would they go for an ETF? Another thing that investors were very unhappy about, GBTC shareholders, was the discount going to almost 40-50%. I mean, it was a terrible product, that closed-end fund, and they weren't seeing that many inflows into their product, Bitcoin into their product after that the premium disappeared and it went down to that discount, and it just kept widening and widening, and it freaked people out. And the existing shareholders were like, this is crazy. Like I'm like underperforming spot Bitcoin by 40% by buying this, share of GBTC. And so that's one of the reasons why they probably went to the ETF. And I think they were thinking like, we might lose the fee, we might drop the fee down, but we will see more AUM come in because it's an ETF, and that's going to be really popular, this Bitcoin ETF. And maybe they didn't consider how much competition there would be, and why there would be like 9. Maybe they didn't consider a BlackRock coming in, or Franklin Templeton, or the fact that there would be 9 or 10 of them all approved at once. Maybe they thought they'd be like 1, 2, or 3, and they would see a significant amount of inflows because it was an ETF product that would offset the loss of revenues from the fee coming down. But maybe they miscalculated that. So this is one thought.
Okay, well, let's move on to let's just do a few minutes on MicroStrategy, and then we'll move on to Vijay's topic. So yeah, I mean, Michael Saylor is continuing to do his thing. So it's not like the playbook is well known before this quarter. He's just continued to execute on it. But as the bull markets come back, it's been fascinating to watch MicroStrategy's price and the Wall Street's reaction to it. So Vijay, any thoughts you have there? And I also want to know, because I don't know off the top of my head, is MicroStrategy trading at a premium to Bitcoin? Is a MicroStrategy share worth more than the market value of the Bitcoin it holds?
Yes, definitely. It is. It's trading, I believe, at 2x its assets under management. So the
2x.
the value of the company is 2x the Bitcoins under management, or thereabouts.
And I assume the software business, the underlying software business, is not probably
it's de
making up
minimis
that.
at this point. I would say it's
So,
it's a Bitcoin holding company that is making use of the equity market premium to acquire more Bitcoins, and it's basically doing a speculative attack on the US stock market, which I think is awesome. And Saylor's sort of figured something out that no one else has figured out. And it's what the thing I find really amazing is that no one else has copycatted what he's done, because this is pretty incredible strategy. If you have a business which is cash flow positive, but is otherwise boring and not really doing much, and you're on the stock market, your company has a premium for being on the stock market. The thing with stocks is that they have this premium because people just DCA into stocks without even thinking about it. Like this, you have retirement accounts, 401ks and IRAs, and people just put a certain amount aside every month, and it just goes into the stock market. It just sort of sprinkled on the stock market, on all stocks, and this tends to put their price higher than it really should be if these products went around and people were very specifically choosing stocks based on their cash flow. So this allows companies to do things like raise money more cheaply than they would otherwise be able to. And that's what Saylor has done. He's figured out this strategy of raising money both through the stock market and through the bond market. And I think the real insight that he had was that he could create convertible debt, which he sold into the bond market, which then gives the bond market, which is much bigger than the equity market. The bond market is the biggest market on earth. It gives the bond market the ability to get Bitcoin exposure. And I think a lot of bond investors are like, how can I juice my performance when all of these bonds across the world are, some of them, I mean, a lot of government bonds are negative yielding or close to zero yield. How can I juice my performance? Well, look, we now get Bitcoin exposure. I can put some of my bond fund into Bitcoin. It's kind of a strange kind of instrument where it's a bond, but it can convert into equity. But the fact that it can convert into equity is where you get the Bitcoin exposure from.
right.
So Saylor was a genius in figuring this out. He was like, whoa, there's this big market over here, the bond market, and I'm sure some of them want to get Bitcoin exposure. What can I do? Because he started out, I believe, maybe Sam can correct me, I believe his first strategy was to sell MicroStrategy shares, just outright sell shares to raise money to buy Bitcoin.
Yeah.
Then he started moving into the convertible debt. And I think that was the stroke of genius that's allowed MicroStrategy to just go absolutely crazy and become the new hot GameStop, meme stock of the world.
Yeah, I mean, at the bottom, the stock was priced at, I think, 130-ish. The bottom of the bear market. Of course, it ran up in the previous bull market when he started doing this, but now we're at 2,000 range. So yeah, you can just, I mean, that's a year and a half.
I think the convertible debt is so smart too, because they can do it at a lower interest rate as well. That's just another kind of angle there that makes it such a stroke of genius. So like you said, the bond investors want exposure to that equity upside, and that Bitcoin is a huge part of that equity upside. And now the bond investors have that. And then Saylor turns around, he can offer the convertible debt at a much lower interest rate.
Yep.
So it's a genius strategy. And I'm just like, he has issued equity, like you said. He's kind of flipped on those two strategies. Like sometimes he issues sells equity when he thinks it's more overvalued, and sometimes he hits the debt market. And he's done both, and obviously it's worked out. But I'm excited to see it just continue too. I mean, there's no reason for me to believe that he's just not going to continue to tap this market over and over and over again.
Well, I would love to understand why he chose one versus another, and when he flips back and forth between it, like what his thinking is on that. And certainly if the premium, the price of the stock gets so far out of whack with the underlying assets of the Bitcoins, then it makes sense to sell equity, to sell shares in the company. But his thinking on this, I'd love to tap his brain. And I think his strategy here, which I think is a completely rational strategy, is not to optimize the dollar price of the shares of MicroStrategy. He's trying to optimize the number of Bitcoins per share.
Right.
So what he is doing is saying, hey, Bitcoin holders out there, you want to accumulate Bitcoin. Well, I'm really good at that. And if you hold a share of MicroStrategy, the amount of Bitcoin exposure you'll get over time will increase faster than if you had stacked Bitcoin directly. That is the game plan he's playing out, because he is obviously fully orange pilled. He wants to get as many Bitcoins as possible, and he's trying to figure out the best strategy to do that, leveraging equity and debt markets.
Yeah. The other, nobody talks about this as much as MicroStrategy, but the other entity that's buying a ton of Bitcoin is Tether, the stablecoin. I mean, it's wild what they're doing too, in a way, because they basically made an announcement last year saying that they would basically use a percentage of their operating profits to purchase Bitcoin. And they just purchased another 8,000 Bitcoin. They now have 75,000 Bitcoin. I saw a tweet the other day that's like, what's the most profitable company in the world? And I'm like, you could make an argument that Tether is. I mean, Tether has a headcount of like 60 people. They had over $6 billion in profits last year alone. 6 billion. And so, and most of that net operating profits comes from the interest of US treasuries. So they turn around and park them. So they're actually, all these rate hikes, they take the interest that they earn on the US treasuries and they use a percentage of that to buy Bitcoin. And there's no reason for them to not continue to see that, because the stablecoin market's exploded. And, you know, you can have your opinions about Tether, and I understand, you know, it's history, but what they're doing in terms of just turning around and buying Bitcoin, that's just another entity in this market, this buyer that's just going to keep continuing every single quarter as they take their net operating profits, a percentage, and just buy Bitcoin with it. So you have MicroStrategy and you have Tether, and then you got these ETFs that I think is just going to continue. And that's just what we know right now. I mean, I expect more institutions and companies to come in the coming quarters, kind of looking at them and saying, "Oh, we can do something like this too." So,
if they're not the most profitable company in the world, they might be the most profitable per employee. So if those are roughly the numbers, 60 employees and $6 billion in profits, that's $100 million in profit per employee.
Their profits are comparable to the biggest, most successful investment banks on earth. They're close. So it is incredible that they are stacking Bitcoin as hard as they are. And the point Sam made, I think, is really important. Essentially, their profits come from they've got this huge dollar assets under management and very low costs to manage that. And then they just park them in treasuries. Short-term treasuries are yielding near 5.5%. So it's interesting to think about the fact that high interest rate environments are usually bad for monetary goods like gold and Bitcoin and just assets in general. The Fed increases interest rates, assets tend to go down. But this is a case where interest rates going up is beneficial to Bitcoin because Tether has this very large assets under management. They collect more. If interest rates went from, say, 5 to 7%, that makes them even more profitable, and they can pile even more of those buckets into Bitcoin. So Bitcoin is in a place where it almost seems like the interest rate environment doesn't matter right now, whether the Fed is threatening to go up or whether it's threatening to go down. Any direction is good for Bitcoin because the organic flows into Bitcoin coming from all these different directions are so significant and much more significant than the outflows that come from natural sellers like miners.
Yeah, well, actually, Hurley, I have a chart of the federal funds rate in Bitcoin. Can you throw that up there? Yeah, so I just thought this chart was so interesting because, you know, one of the arguments for Bitcoin was that, hey, this is just, you know, it just benefits from easy monetary policy, low rate environment, which is probably true. But what we've seen over the last year, and maybe what Vijay just mentioned as part of it, is Bitcoin perform well in an environment of rising rates. And that's something that's very different throughout all of Bitcoin's history. And I just think that chart is phenomenal. And then, like, if you, you can bring that back down. But also, we talked about this with Luke Roman last show, which is the convergence of real rates and gold. And so you see gold and Bitcoin both doing something that's very different than what it historically has done, which is perform well in an environment of rising rates. It could be what Vijay just mentioned, where you have these organic flows that just continue to buy and actually benefit from the interest rate environment. The other thing to think about is like if gold and Bitcoin are just sniffing out that interest rate policy doesn't matter as much in terms of the liquidity conditions, because the Fed has said that they're going to use different tools to come in, like the bank term funding program, like where they came in and saved things, changing the reserve requirements at the banks. They can use these different things that will indirectly lead to higher inflation levels, even if they decide not to touch the interest rate policy. So if they keep rates still, they can do other things. And maybe gold and Bitcoin are like, it doesn't really matter anymore because you guys are going to do these other things that are still going to be inflationary, even if you don't touch the interest rates. And so we're calling you out on this, and the market's sniffing that out. And maybe that's why you see that divergence in Bitcoin and gold and rates. And so that's like one of the most interesting charts, I think, in all of finance right now.
Risk on and risk off asset. Plus there's, fiscal policy.
Yeah, well, yeah, it's basically driven by fiscal policy. Yeah, exactly.
Yeah. So, okay, Vijay, you gave us a topic that you wanted to get into today, which is how prices move in a bull market and why. So it sounds like you've kind of put together a framework for bull market price action, which is appropriate, coming from the author of The Bullish Case for Bitcoin. So let's hear what you got.
Yeah, so hopefully I don't drag on too much, but I talked a lot about these cycles in my book and where these cycles come from. And really why does the price of Bitcoin go up at all? I think it's basically a fundamental imbalance of supply and demand, where you have growing adoption, and as you have growing adoption, the price is essentially just tied to growing adoption. Monetary goods, the price level is basically strongly correlated to the number of people who hold the monetary good. They're not valued based on cash flow like real estate or stocks or bonds. So that's why the price rises in general. It's just you have growing adoption. But then Bitcoin's interesting, right? You have these cycles. Adoption, if you didn't know about Bitcoin prior to Bitcoin existing, if someone had asked you if there's a new monetary good, how would the price increase as adoption increased? People might think it might increase sort of linearly with adoption. As adoption grows, it just grows linearly. But that's not what we see. We see these cycles, right, where you have sort of a plateau, and then the price starts creeping up, and then you have this huge climax, and then you have a crash. And I talk a lot about this in my book and why this happens. Basically, in each cycle, you have a cohort of people who are reachable in the cycle, and as more and more people are reached, that you get more and more profit seekers, and you get more and more leverage near the end, and then you run out of people in the cycle. So the first cycle, for instance, was basically cypherpunks. These are the people, they were reachable because they understood enough about Bitcoin to even consider investing in Bitcoin. Like most average people didn't even know anything about Bitcoin and were not reachable in that cycle. But the cohort grows bigger each cycle. So I've talked a lot about this. What I kind of wanted to talk about a little bit was more price movements within a cycle, because that is not a topic I've really talked about too much. And this might be obvious on reflection, but I think there are three kinds of price movements within a bull market. And the first I sort of call a zone of consolidation. And a zone of consolidation is this sort of price area where supply and demand basically are equal. And what you'll have is right now we have a price that's sort of moving between 65 and 73,000. And what's happened is we're at a price level where you have enough sellers who are attracted by these prices that they want to liquidate some. You have whales who have been around a long time, and maybe in their head they're thinking, if Bitcoin just gets to 70,000, I'm going to sell a certain chunk. And the way I kind of describe this, I have a tweet from a few years ago where I talk about this like waves crashing against a glacier, where as the price goes up, the waves continue to crash against the glacier, but eventually the glacier will fissure and a big chunk of ice will come off. Mm-hmm. And what is that big chunk of ice? It's like the price gets to a certain level where some whale is like, I need to sell some. And so that's when you start to get these zones of consolidation where you have a price where buyers and sellers are sort of matching demand. Someone like Saylor comes along and he's like, I want to buy 5,000 more Bitcoins, but there's some other whale who's like, I want to sell 5,000 Bitcoins. And in these zones of consolidation, you can still have pretty large price movements, right? You can have Bitcoin go up $5,000 or drop $5,000, but it sort of stays in this zone for a prolonged period of time. That's where I think we are right now. We're in a zone of consolidation. The next type of movement in a bull market is price discovery. The zones of consolidation only last as long as there are sellers who are happy to sell at that price point. And eventually you run out of supply and there's some whale who wanted to sell and they've gotten rid of everything they want to get rid of at that price point. And then there isn't really any sell side to match the demand, the organic buy side demand. And then you get into this sort of open field of price discovery where the price is basically searching for that next zone of consolidation. What it's searching for is the next psychological level where some large set of sellers are ready to say, I want to sell. So once we get out of this zone of consolidation that we're in right now from 65 to 73K, it's completely unclear where the next zone of consolidation is. No one knows. It could be at 80K, it could be at 90K, it could be at 100K. But you're in price discovery mode where the price starts shooting up very rapidly because there's just not enough liquidity on the supply side. And the last kind of price move inside a bull market is what I call air pockets. And what happens when you're in price discovery mode is that you have speculators on the sideline who they're not really organic demand, but they're just there to sort of trade in and out and juice their returns through leverage. And so what they will do is they'll start borrowing a lot so that they can make leveraged bets on Bitcoin to capture the price discovery. Right. And then what happens in those phases is people get over leveraged. They get greedy and they're like, wow, I'm making so much money, I'm going to borrow even more. And they become very sensitive to any price movements. You get a small tick down and some of these people get liquidated, and then that liquidation forces the price down more and it causes other liquidations. And all of these people who are leveraged get liquidated very quickly in a sort of cascading liquidation. That's when you get an air pocket and the price drops, say 20 or 30% in just like a few days or a week. So perhaps it's obvious, but this is something I haven't talked about, is how prices are moving.
Did we lose him? So good.
I know. Right as he was about to sum up.
Well, I agree with everything BJ just said. BJ, you kind of stopped there for a second.
Yeah. I'm sorry.
You're hanging on every word.
You guys, let me know when you can hear me.
We got you now. It was a cliffhanger though.
Oh yeah. So I just finished.
I
just finished with saying that what I was trying to say is this is the underlying dynamic that is causing these types of price moves. So when people are trying to figure out like why is the price suddenly going up, why did it crash, or why is it stuck here, that's what's kind of happening behind the scenes in terms of the actual market participants and what they're doing.
Yeah.
I have a couple of questions. Go ahead, Sam, and then
I honestly just want to provide some context what Vijay was saying. I think that's a great framework to think about bull markets, and I think he's right. We're in this. I mean, price action shows it, but we're in this consolidation phase. And Hurley, if you could throw up that coins last moved in 1 year or more chart that I had, this kind of confirms kind of what Vijay was saying. You're seeing this dip, this churn, as maybe people are saying, "Hey, 70K's." That level where I'm going to take some profits. It kind of peaked at 70,000. You've seen it kind of pop back down to 65,000. And you kind of see that trend in previous bull markets where you see profit taking as it comes up and you see that number drop. And this kind of decreases a little bit when you go further out, 2 years, 3 years, but you see this kind of similar trend to what Vijay is saying during these consolidation phases.
Yeah. So I have a couple of thoughts about how maybe we'll see kind of different pattern, maybe not a different pattern, but different kind of scale as the chart goes up over the next 12 to 18 months. So in the past, let's actually looking forward to like the bear market that will come afterwards, right? We've had 80 to 85% drops after this blow off top, and it'll drop, it'll try to recover, and then of course it'll end up going down, and we all start fighting each other on Twitter and getting frustrated, blah blah blah, with the price, or we just focus and build for the bull market. But the question is, would we possibly see like maybe half of that, like 40%, kind of 50% max on a bear market drop, because we've got more liquidity able to come in through ETFs? If institutions start coming in, they'll kind of, I think they might have this kind of smoothing effect on the dips, because they'll buy and then they'll rebalance. So they'll kind of be buying and selling as it kind of ratchets up, if that kind of large money comes into play. So how do ETFs and institutions coming into the market possibly change what we see in the bull market price action, and then like maybe the bottom of a bear market in terms of percent drop? You want to go with this one, Sam? You're on mute, bud.
I think you're not going to see as far drawdowns. Like, I am a believer in that, because I think you're going to see, certain factors that weren't at play in previous markets, like rebalancing that occurs when the price drops. Say they have 5% allocation, these institutional investors. When the price drops, they'll actually be buyers. And so I think that's a kind of a floor. So I don't know if we'll actually see, I still think we'll see drawdowns, because like what Vijay just mentioned, people love leverage at the end of bull markets, and we will see significant drawdowns, and still early in Bitcoin's, adoption phase. And so I think we'll continue to see volatility, but maybe just less. But this is already like different. We're seeing the effects of the ETF just by how quickly we've recovered back to all-time highs compared to previous. This is another chart that I have. Hurley, if you could share this one. This is from NYDIG. This is just comparing Bitcoin major cycles of how quickly we've returned back to the all-time high. During the bear market, it only took 470 days this time. Previously, it's over 700 days that it's taken us. And I think obviously the ETFs are a big component of this, that have really driven the price faster than previous cycles back up to all-time highs. And so I do think the cycle has the potential to be different. You could take that chart back down, just because of these factors. I mean, we haven't really seen an environment like this for Bitcoin. You throw into the macro environment, the fiscal spending, just the general awareness around Bitcoin, the education levels are way up, and then just the accessibility of this asset and the players and the money involved this time around. I think potentially we will see maybe a slightly different cycle than what we've seen in the past.
We all like to say that every cycle. It's different this time. But what do you think, Vijay? I mean, we do have some reason to speculate that it might be, like, concrete reasons to speculate it might be different this size, just because of the size of players and the way they buy and sell.
Yeah, so I have conflicting thoughts on this. I do believe over time the top to bottom volatility from top of the bull market to the bottom of the bear market will reduce. And I actually believe that would have happened last cycle if it wasn't for these bankruptcies and all these companies. Mm-hmm. Thankfully, they've all been purged. Maybe there are still some cockroaches under the cupboard, but a lot of the degeneracy that was created by these companies has been blown away. And so I think this cycle is going to be healthier in that sense. On the other side, taking the other point of view, I think human nature doesn't change. And I don't think, the fact that it's corporations buying necessarily helps us. I think some of these corporations have shown themselves to be paper hands, like Tesla, Tesla buying a bunch of Bitcoin and then like paper handing on the way down. But again, taking the other side, some of these flows from the ETFs are price insensitive. You have some of these ETFs now, not just the direct Bitcoin ETFs, but the retirement funds that Fidelity and others are creating, where they have some percentage of their assets going to Bitcoin. And these retirement funds do not care about price. Yep. People are just DCAing into these funds, not caring at all through their IRA. Once a month, they put in, say, 10% of their savings from working. And those are price insensitive buys that are not going to go away. So those daily flows are a new source of demand, and I think will become a more significant source of demand that provides a cushion under the market.
Yeah. So this is what I think. I mean, it's because the people who are price, I guess, not sensitive, but are the allocators of those funds, right? It's not the people who are going to be putting the money in, obviously. So they're just going to DCA constantly. But I can see like these institutions that have an allocation percentage in mind, and then they have to rebalance to meet that allocation. They're buying and selling in a much different way. It's not an emotional way. They're not buying with leverage, and it's going to be much more consistent. And if it's like a large amount of capital, which ostensibly it would be for some of these funds, then I could see just the effect on price. It would create a floor, like Sam was saying. So it would kind of smooth things out. And this is how I think you get more capital in. This is how you smooth out volatility over the monetization process. And that will lead to people seeing it as a more reliable medium of exchange. And and you're just kind of marching toward unit of account at that point.
Yeah. I think we're super early in that too, right? I mean, we've had two BlackRock funds where it's gotten added, huge funds, like tens of billions of dollars in those. You've seen Invesco put a couple in, and but we're going to see a ton of that. And so that just like passive flows over and over and over again. And we're still just extremely early. I mean, it's this overall theme that I've had is just like, it's not fully integrated into the financial system, not even close. We haven't even scratched the surface.
Right.
Yeah. Can I ask you about that, Sam? That there's something I've heard. I'm not an expert on this, but amazingly enough, these ETFs, I think, have only existed 90 days, so 3 months now, right? And from what I understood, that there are a bunch of these platforms, financial platforms, which couldn't get access to these ETFs until 90 days after they had launched.
Right.
This was my understanding. So we are now at this kind of very interesting point in which these financial platforms can get exposure to the ETFs. And so I think this feeds into what you're saying about how it's not even close to fully integrated into the financial system. I'm really curious what's going to happen over the next couple of months as these ETFs sort of filter into these financial platforms and a lot more people are able to get exposure to them.
Yeah, I mean, that's kind of what I'm thinking about. And you're right. I don't know. It's somewhere like 3 months, somewhere 6 months of they require it to have trading data for any kind of new ETF products before they can list it. It's like, part of their compliance. And once that passes, I mean, if you look at the performance of Bitcoin during this time in those ETFs, I mean, they're going to be like, yeah, maybe we should offer this. There's significant demand. We can make some money off this. First off, that's another thing these ETFs do, right? They make it easy for them to actually make money. These institutions charging a fee, whatever. And so I think we expect that, but also on the other side, just how long it takes these large RIAs, broker dealers, whoever it is, these institutional investors to make decisions on something like this.
Right.
And so we're going to see that on the demand side too. Like we've only seen a fraction. We're starting to see the SEC filings come out. Some of these like RIA platforms, MicroStrategy, a great follow on Twitter, has been tracking this stuff. But you're just seeing like in the filings, they own BlackRock, they own Fidelity, like small allocations. But I think you're going to continue to see that. And the bigger players are just going to take longer to kind of make these decisions. They're not in a rush. They're actually like looking at the price action and being like, well, it's up 50% quarter. Like there might be a pullback here. Like, these CIOs are just looking at this thing probably very curiously. I mean, when you hear Larry Fink going on TV saying IBIT is the fastest growing ETF in the history of ETFs, I mean, you can't ignore that. And so I think you'll continue to see that. There's still like parts of the financial system too, where I consider if we're building bridges, so to speak, and the ETFs are like the first like steel bridge that we put down. Like it's in place, it's solid, it's not going anywhere. But been trying to lay down these like rope bridges, like Custodia, trying to get a master account denied. SAB 121 is like an accounting guideline by the SEC that really prevents banks makes it more expensive for them to interact with Bitcoin at all or hold Bitcoin at all. And see, these are other things that need to come through over time that'll just continue to integrate it. And I know some Bitcoiners are listening to this is like, well, this is not what we want. This is the banks. Like Bitcoin, is supposed to be, we're the bank and stuff like that. But to me, it's like completely inevitable for this to happen. Bitcoin is for everyone. Everyone's going to see the value in this thing because it is the first form of digital money. It's the scarcest asset in the world. And there's no reason why Wall Street's not going to really want this thing just as much as an individual. It's just up to the incentives of Bitcoin to basically, prevent any kind of attack or change the incentives or anything like that. And like personally, I think Bitcoin's game theory can survive any attack like that. And so I think it's inevitable. I think it's happening, and I don't think it's fully there yet. And so there's things that need to be worked out. Yeah. The Custodia news is really interesting. Like we could get into that a little bit if we want, but that's kind of where my mind's at when I look at the ETFs and how we can maybe move forward.
That sentiment is exactly where I stand with like ordinals and BRC20s and stuff. I don't like it. I'm a monetary maximalist, but it's inevitable. It's inevitable. People are going to try these things. If it's possible, it's going to be done. And so it's just like, instead of going up in arms about it, like, maybe filters are great, push back if you can, but this stuff's inevitable. Same thing with the banks. Like, we've just got to trust that we've studied this system, and we have conviction that like you said, incentives are aligned properly, that we can withstand attacks. But that doesn't mean that we should also rest on our laurels. Like, we got to run nodes, we got to stay informed, and the node operators of the world unite, because like we're the front line of defense on what transactions are real or not. The incentives are going to be interesting for these big corporations and the banks, because they may want to change Bitcoin, and they will try. So it'll be fascinating.
Yeah.
I
think there's a lot of drama about like how, there's a potential blockage of one of the ETF issuers to fund open source devs and stuff like that. And, personally, I just think Bitcoin's open source code. Like, anybody with the skills, any developer can work on it if they want. And the fact is that you can't stop an institution from funding a dev to work on the open source code that is Bitcoin. Like, it's really impossible to do. If they want to do it, they'll do it. It's just, you just got to run your own node, right? That's all you can do. You can't just like force somebody to not fund a dev to work on it because you don't like what they're doing or what they want to do with it. All you can do is, vote with your node and run your own node. And that's how you kind of, interact with Bitcoin the way you want to, or, push it forward the way you want to.
Yeah. VJ, it seems like you have some thoughts.
These are fascinating debates. The debate about ossification.
Yeah.
I definitely have thoughts on that, and the debate about ordinals. I think these are very healthy debates that should be had, and I'm glad that they're being had. I haven't expressed an opinion on these things. I think I lean towards what you said, Brady, with ordinals, that if it's going to happen, you can't stop it happening. And I think it's a futile attempt. If people are going to use Bitcoin to do certain things that are not, specifically monetarily related, then there's nothing you can do about it. And I always like to think about gold as the analogy, because I think some people think Bitcoin is this completely new thing. It's completely disconnected from everything in the past. But I actually think Bitcoin is very strongly related to gold in what it is. And when I look at gold, I think you have the same idea of ordinals on gold as well. So in a slightly different sense, you have a numismatic premium for coins. And that gives you something which is specific and special about that coin. And you can have coins that are minted that are collector's items and have value above the gold value. That's fine, but when gold was money, that's a very tiny fraction of the total usage of gold. And I think ordinals are just a fad in that sense. That they'll get some usage, people will find them interesting. Then you'll have kind of mania probably, where people get overly excited, and then there's too many, and then you'll have crash, and then people will be like, okay, it was sort of interesting, but it's not that big a deal.
Yep.
But you have to let people go through that cycle and understand that this is not the main use case of Bitcoin. They'll find it naturally without being forced to find it. So I agree with that. In terms of ossification, I would say I'm an ossification maximalist. I'm being pro ossification for a very long time. I've been pro ossification pre-SegWit.
Wow.
And I have somewhat controversial opinion that Bitcoin would be just as valuable as it is today if SegWit had never been incorporated into the protocol. And certainly there are some benefits to having the protocol improve. There's certain technological benefits and improvements to privacy, which are great. But on the other hand, the core value proposition in my mind with Bitcoin is that it's an immutable protocol for value transfer. And if it ever becomes possible, or there's some low probability that Bitcoin could be changed for whatever reason, that's no longer backward compatible, then I think the value proposition of Bitcoin is tremendously harmed. So I think that while these new features are cool, we should be very, very careful about changing Bitcoin. We should err on the side, and in an extremist way, of not touching anything.
Yeah.
Because we have this new magical system that lets us transfer value across the globe that cannot be tampered with. So we have an institution in the world which has never been possible before. It has a sense of permanence. All human institutions decayed over time. If we can keep this and keep it permanent and unchangeable, then we have something incredibly precious and valuable. So I believe we should err very extremely on the side of ossification. And developers love thinking about things in terms of software projects. And wouldn't it be cool if we had this extra feature? The feature is the ability to transfer value without anyone censoring you. And you can only get that if you have an immutable protocol. So those are my thoughts on ossification. I hope people, I think it's totally fine to fund developers, and most development effort is not related to consensus changes. So that's fine to me. Development which fixes bugs or cleans up the code or whatever. A lot of development is of that kind.
Yep.
And you can't stop developers anyway. I mean, Sam said, it's open source. People will work for free because Bitcoin is a flag that people rally to. And it's a flag that people rally to because it's like a pro-freedom technology, and people will work for it for free. So that's my other point of view, that people are going to work on this no matter what. So don't get too upset if someone like Sailor says, I don't want to fund development. It doesn't matter if he funds development or not. Who cares? People will work on Bitcoin regardless of whether someone's funding it. That's been true since the beginning.
Yep. I made a poll last night. Which side are you on, ossifiers or innovators? And I think it was, and then I had an undecided option. Ossifiers like 40%, innovators like 28%, undecided was the rest. And I didn't put a middle option, which is like people who are, will add some innovation in extreme circumstances only if there's very low risk and very high reward, which I probably should have done. But I think that's where a lot of Bitcoiners land. There's obviously nuance between those two extremes, but it was interesting. I just wanted to see kind of where people leaned at least. And there you go. So it's
well said.
Yeah.
I think there's one more option that you would add to, Brady, which is the only, and this is what I support, the only situation in which I think Bitcoin should be changed is under gravest extreme. And that is when there's critical bug or something that breaks Bitcoin, something that makes it so the value is destroyed because, say, SHA-256 is broken, then we need to find a different proof of work function. Those are the only cases where I think we should be pushing for changes to Bitcoin that are sort of consensus-based changes. I think we've got enough soft forks into Bitcoin now. I think Taproot, I would be happy if Taproot was the last soft fork that got into Bitcoin and we stopped from here.
Now we're looking at like covenants and CTV and CAT. Those seem to be
I have a friend Brandon, who's also a Swan as well. Brandon's an amazing guy, and he's very pro covenants. And so I have huge respect for people who are on the other side of this, but I think we need to look at the bigger picture.
Yeah, I want to host a debate on Spaces with like ossifiers and then some innovators, and then also just a debate about CAT and CTV and covenants in general, like which version of covenants, if we do it, what's the case for it, etc. So I talked to Brandon about it and he's down. So I think I'm going to try to make that happen. I find those discussions very important. And I think we hit a lot of important topics in this discussion today as well.
Hell yeah.
It was a good one. Good rip. I think we'll wrap it up there. Thanks for joining me, guys. I'll see you in Slack.
Thanks, Brady. Always a pleasure to have you back, man.
All right, man.
That was
good
awesome.
to see you, Vijay.
Good to see you, Sam.
All right.
Bye, guys.
Bye. All right. Thanks for joining us. It was a lot of fun to be back on the show, sit in the host chair, let Sam and Vijay do the heavy lifting. But always love talking to those guys and learn a lot. I hope you did as well. At the top of the show, I mentioned, and maybe you weren't here. If not, I want to remind you or tell you that we've got an awesome new version of the Swan app out. It's a big update. We've been working on it for quite some time. Really proud of what we've done. Two big changes. One is you can onboard super fast, super easy. You don't need to scan your face. You don't need to take photos of IDs, bills, that kind of thing. Just a few pieces of information, and you can get approved to start buying Bitcoin in just about 1 or 2 minutes. Then you add a funding source, like your bank accounts, and you can start buying. So maybe take 3-4 minutes for you to go from 0 to your first Bitcoin. Now, this is great for you all as Bitcoiners, or if you're new to Bitcoin and don't have the Swan app yet, please do so. If you do have the Swan app or you're already a Bitcoiner, you're going to get those questions inevitably as we enter this bull run. Where do I start? How do I get my first Bitcoin? We've made it very obvious that the clear answer is recommend the Swan app to them, stand next to them while they get their first Bitcoin, and then you can send them over to swan.com/welcome. We've got a 6-part, 10-minute videos, 6 videos to welcome your friends and family into Bitcoin. And you should check it out as well. It's really good. It's hosted by Sam's wife, Natalie Brunell, consummate professional, host of Coin Stories. And she does a great job, teaching people in a nice high-level overview of Bitcoin. So check out the Swan app, search Swan Bitcoin in your app store, go to swan.com/welcome, and send your friends and family there. The last thing is Pacific Bitcoin. Check out pacificbitcoin.com. You can scan the QR code right there and grab your tickets. This year is going to be October 18th and 19th, I believe, again in Santa Monica, California. Absolutely cool venue at the Santa Monica airport. We take over a giant hangar, and it goes from complete blank canvas to awesome festival, and it's a great time. The vibes are super high. Nothing but great reviews of the first 2 Pacific Bitcoin festivals, and we'll have high caliber, world-class talent on the stages, the brightest minds in Bitcoin, all kinds of fun things to do outside of the stages as well. And you'll see some of your favorite Bitcoiners wandering around the festival and enjoying talking to the plebs and mixing it up. So it's a really cool festival in the Bitcoin conference space. So encourage you to go to pacificbitcoin.com and grab your ticket now. The prices do just go up as we get closer to the event in October. And with that, I'll sign off and see you next time. Thanks.